Okay, guys, thanks for joining us here in the charts. This is the Market Beast. We're going to take a look at the Dow Jones just to assess the overall direction of the market. Have I changed my position from a bullish standpoint, or do I need to backpedal and say that, no, we're not headed to the upside? We're going to go over those details in this video by taking a look at the weekly candles. We're going to revisit that previous chart that we pulled up, and I'll leave a link for the video. So let's get into those details, guys, to see where the market can potentially go by looking at the Dow Jones. Let's get into it, guys. Welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around. I'm loyal subscribers. Let's go ahead and dive right into the charts here. So today's February the 23rd, 2023, and the current the previous close is $33,111.93, slightly positive close, 0.1% for the day. Okay, let's just close like that 5 to 6 grace period on the Eastern Standard here. All right, guys, let's get into it. So you may remember this chart. Here's the divergence in the Fibonacci levels on the link that we left in the video. Here's a video post where we were exploring a potential bullish move in the financial markets as long as it stayed above that one specific level that we went over, which is $32,550. It's basically the yellow line right here, the 0.382 on the Fibonacci retracement level. We currently still have that green question mark because I'm not sure if this is actually going to play out in the bullish stance here. If you knew, we actually have a 41,000 price target for the US30 or the Dow Jones here at some point this year. Don't quote me on the time, guys. Between the second quarter up to the end of this year, I do have a prediction of a 41,000 incoming price target. Okay, but again, please don't hold that against me for the time. But one of the things that determines whether or not this market has potential to move to that level is the yellow line here, the 0.382 Fibonacci retracement level. Really simple, $32,550. Okay, so that is the level. And again, this is not a new chart, but one of the things that's new on this chart is this level, this right here, 239 days. It's actually really simple how I pulled up that level. And the reason that I'm actually exploring that is because so far so good. It's actually above the the yellow line on the fib level, the 0.382 level. So far so good. And again, if you're new, what we're doing is we're referencing what happened in the past back according to the 8 cap Dow Jones Industrial Average information that we have here in front of us. Again, the broker's 8 cap back in February-ish 2016, something similar of this gesture played out back in 2016. Yes. Okay. So we basically got the divergence in the RSI. This is the RSI down below. I didn't explain that. Sorry. Down below, the blue squiggly lines you see down there is the RSI. That represents the overbought and oversold in the market. And the little green bull that you see here is basically this. It's an indicator that I was able to save on TradingView.com. It's a rare signal that came in that there's a bullish divergence, again, back in 2016. And of course, as a result, the market went substantially higher as this market is in an overall uptrend and it is continuing to maintain its stance in a bull market. Okay. And the reason I'm explaining that is because you must remain bullish in a bull market as long as the previous level of resistance is maintained in the overall trend, right? And that could be identified very simply here. We went over this before, but I'll briefly go over it again. As we erase everything on the chart, zoom in, keep it simple, weekly candles. Okay, previous level of resistance, if you're new here, right, it's super simple. That's going to be right there at about $29,500. Okay, and you identify that because of that, that rejection there at about February 2020. Okay, I just want to make sure we're all on the same page here so that we can understand the trend. Okay, the trend is to the upside. I know we got a lot of crash callers. I do think that the market appears to be elevated, but it doesn't matter what we think is going on, right? Or how much we think the market is elevated. The market is a beast and the market is in an overall uptrend and we must respect the trend. Okay. Higher high, higher low. All right. Higher low in the overall picture, right? Higher high, previous level resistance. The market uptrend is fully intact. Respect the trend, guys, okay? So now that we've broken that down, the trend, again, we are looking at a potential, I guess we can call it somewhat of a fractal that played out back in 2016. But let's zoom in here to focus in on why I have that 238-day little box there, okay? So right now, at the current day, it appears to be everything is still in line, guys. I still have that 41,000 price target as long as the market stays above the yellow line, which you can see here back in 2016. After we received, sorry guys, I'm working on my professionalism. Sorry. After we received the weekly divergence on the RSI corresponding with the price as it was continued to kind of make lower lows according to the wicks here, right? And of course, the RSI made higher lows. I just pulled out my fib level, right? And I was able to kind of gather up this little structure here, and notice that the 0.382 held the support. But again, let's get to this little box here. So basically 238 days was the price action consolidating or hovering, whichever one you want to use, kind of hovering above this line, right? Just doing that, consolidating that normally does. And then of course it broke out into a very aggressive upwards trajectory. And I think this is something that we can explore here, right? And I think the market has potential as long as, again, it stays above the 0.382 on the fib level, 32,555 as over to current day that we will get to here in 1 second. But again, I just wanted to show you guys that 238 days is where I was able to find this little consolidation hovering above the fib level. Okay, so let's scoot on over to present day, see if we can speculate the potential of what can take place next here. But everything seems to be still intact. We do have the divergence on the RSI. We got a check mark for that. Of course, the price doing the opposite, right, of the RSI, making lower lows, right? Just this kind of two reference points here. Lower lows when the market the RSI is making higher lows, and we're right now above the 0.382, just kind of hovering right above this line. So that 32,558 determines if this will play out. The 238 days, again, we do have question marks because I'm not sure if this is going to play out. But let's see if this 0.382 level can hold. I'm still pretty confident that the divergence in corresponding to the divergence on the RSI in comparison to the price, and of course, this very nice buyer's commitment. I don't know if you guys remember when we explored the buyer's commitment. Let me erase everything so you can actually see it. So when I'm looking at price, guys, I'm always looking at the same thing. I'm looking at the structure in the price, and this is the buyer's commitment. Do you guys remember? Let me know in the comment section. Do you guys remember us going over like buyer's commitment? These are buyer commitment candles, meaning when you see a very large or consecutive green candles come into the market, you can rest assured that this identifies buying, guys. I know a lot of people say it's voodoo, but it's just measuring the inflows and the outflows by way of a graph or candlesticks in this case. And that's all it's doing, is just measuring the amount of capital that's going into the market and the capital that's coming out of the market, right, by candlesticks as well as volume. Okay, so this leads me to believe this little, green candle structure here is a buyer's commitment. And if these buyers do have good intentions, which they have stepped in, right? And if they have good intentions, it's likely the market will hold up in a relative structural range and continue the overall trend. Does that make sense? So 29.5 is obviously the previous level of resistance. And of course, at this point, we're trying to figure out if the structure from the recent buyer's commitment candles will hold up the market and continue the overall trend. All right. So hopefully that was explained well. Let's just get back to the RSI and everything here. So the 239 days, actually, I measured it from this weekly candle. We'll wrap things up here, guys. October the 24th, 2022. And if you stretch 239 days on over, that would leave the potential breakout to the upside, which is what I'm still going to say the market has potential to move higher here relatively soon, right? Give it up to 6 months, up to 1 year of this full 2023. It stretches on over to June 19th, 2023. So if the market sellers are continuing to fail to make new lows, right? That's the market seller's obligation at this point, because back in January 2022 is where the kind of highest point that we can measure here reached, right? And the market continued to, kind of get beat up, right? Down, up, lower, high, down, lower, low, up, lower, high, right? You can see it. Gestures, lower lows, lower high. Beautiful gestures from the sellers, but now they have an obligation, guys. The sellers must make a new low in order to show the financial markets that they're ready to disrupt the overall trend. The overall trend is up. The short-term downtrend is questionable right now. Okay, if there is no new low, then unfortunately for the sellers, if you guys are short in this market, it's not going to end well for you. Okay, I'm just letting you know. From as far as what I'm seeing here, okay, a new low is going to be about $28,000. Okay, so far so good. The buyers are holding this market up above that 0.382 fib level. And let's see if the market participants who are interested in continuing the overall uptrend can get this price action up and above the new highs, well, the overall highs, which is about like 36,400-ish, according to the weekly candles bodies. Let's see if we can make new highs somewhere within this year or towards the end of this year. And again, I know I'm probably going to get comments like, dude, no, the market's going to crash this year. That's fine. One level determines that. Okay, and we'll wrap things up. I'm going to pull up the moving average one before we wrap things up here. $32,500 and about $50, guys. That is the only level. And one may say, come on, dude, that's a weird Fibonacci. That weird Fibonacci stuff doesn't matter. Okay, well, let's do this. Let's actually erase everything. And let's pull up a moving average. This doesn't make it any better, right? But the one level that I mentioned on, I think, that video that we made a post on, if you want to keep it simple, you don't have to pull up any Fibonacci levels, none of that, technical jargon, right? Just pull up one moving average, guys. That is a 50 MA. It is a simple 50 MA on the weekly candles only. And this will allow you to truly understand the trajectory here in the short to midterm. If there is price, weekly candles closing above the 50 MA, then it's likely this market is in preparation to rip to the upside. All right, that is my prediction, guys. No crash dummy here. I'm not predicting a crash. By the way, that level is at approximately 32,655, just shy, just above that 32550 level that we've been saying ever since we made that last post on that video, guys. Okay, when was that? All right, so that's pretty much the end of the video. Hopefully you guys enjoyed that. I'm looking for when I made this post. It was on December the 16th, 2022. So ever since then, we've been saying, no, guys, don't look for a crash. Look for a move higher, whether it's a consolidative fade before a move higher, or just kind of, it's, I don't know, just a slow, methodical move down. I'm not sure of the exact gesture on how it's going to play out. The only thing that I know right now, guys, is there's one line in the sand, and I will continue to say that until the market shows me otherwise, not proves to me anything. I'm just going by the language that it's speaking here in the charts, and the language is saying that, yeah, the market is in preparation to move higher, guys. Okay, let me know what you guys see down in the comments section. Are you guys seeing a crash this year? Do you see the market making new highs? I'm seeing new highs this year, guys, if that line in the sand is respected, 32,550. So that's it. That's what I wanted to let everyone know. Pull up that 50 MA, 50 simple moving average on the weekly candles only, and everything looks just fine. We're looking at a potential break higher in sometime around June the 19th-ish, 2023. Please don't quote me on that time, guys. I'm not sure if that's going to play out. So, yeah, just be patient. And if the market's getting boring, just doing some sideways consolidating, then it's likely it's in preparation to move higher. That's the end of the video, guys. Hopefully you enjoyed that. So if you don't mind doing me a huge favor before you go, by simply leaving an appropriate thumb, I'd appreciate it below the video if you enjoyed the content, and leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your continued support. If you guys are new, we also explored the alternative market, Bitcoin, for now, so you can kind of join us here on this interesting journey, and we'll send it out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now, guys, gals.